Welcome back to Asset Index, where we help you navigate wealth with data, not hype. If you've ever wondered whether SCHD or VOO is better for building long-term wealth in 2025, you're not alone. These are two of the most popular ETFs in the market, but they serve very different purposes. Today, we'll compare them side by side to help you understand their roles and what to consider before investing. Let's dive in. What are SCHD and VOO? VOO is Vanguard's S&P 500 ETF. It tracks the 500 largest companies in the U.S. Think Apple, Microsoft, Google, and Amazon. VOO is all about broad market exposure and consistent long-term growth. SCHD, on the other hand, is the Schwab U.S. Dividend Equity ETF. It focuses on high-quality dividend-main companies with strong fundamentals and consistent cash flow. It's not about growth, it's about income, value, and long-term stability. Historical performance. Over the past decade, VOO has delivered strong returns driven by its exposure to large-cap growth, especially tech. SCHD has also performed well, with slightly lower total returns but with less volatility and a higher yield. It's important to remember that past performance doesn't guarantee future results, but it gives us context. Dividends and income potential. VOO's dividend yield is relatively low, typically around 1.2% to 1.5%. That's because most of its returns come from price appreciation, not income. SCHD offers a dividend yield around 3.5% to 4%, providing consistent income that some investors choose to reinvest or live on. If your goal includes generating income, this might be a major factor to weigh. Risk and volatility. VOO is diversified across sectors but remains heavily weighted toward tech and large-cap growth. This makes it more sensitive to market swings, especially during downturns. SCHD screens for companies with solid balance sheets, profitability, and consistent dividends. As a result, it often shows lower volatility, which may appeal to those who value portfolio stability. Costs and fees. Both VOO and SCHD are low-cost ETFs. VOO has an expense ratio of 0.03%, while SCHD's is 0.06%. The difference is minimal, but in large portfolios, even small fee differences can add up over time. Still, both funds are considered extremely cost-efficient. Tax efficiency. VOO is highly tax-efficient, thanks to Vanguard's unique ETF structure. It tends to generate fewer taxable capital gains, which can be helpful in taxable accounts. SCHD is also relatively tax-efficient, but may generate higher dividend taxes if held outside retirement accounts. The tax impact depends on your specific account type and income bracket. Use cases and strategy. VOO is often chosen for long-term growth, market-wide exposure, and low tracking error to the S&P 500. SCHD tends to appeal to those who value income, dividend growth, and lower price volatility. It can also play a stabilizing role in a broader portfolio. Some investors use both, with VOO as the core and SCHD as the income engine. There's no single right answer, it comes down to your personal investing goals and risk tolerance. Final thoughts. So which one builds wealth faster in 2025? If the market is in a growth cycle, VOO may outperform. If the market is sideways or volatile, SCHD's dividends and defensive nature may shine. This isn't about picking winners. It's about aligning your investments with your goals. If you're focused on capital appreciation and total market exposure, VOO is a strong option to consider. If your strategy includes income generation and downside protection, SCHD deserves a close look. Both are solid tools, and using them together can bring even more balance to your strategy. Thanks for watching Asset Index. We break down complex investing topics into clear, actionable content to help you think long-term. Be sure to subscribe for more weekly videos on ETFs, index investing, and dividend strategies. See you in the next one.